In the energy quadrant, taking a look at the May WTI crude oil future, which faced back-to-back losses, but both yesterday and today were very quiet drops, with today showing very low relative volume. The high today, 62.06, was up 0.86%, and the low today, 60.88, was down a lofty 1.06%. And as we come into the close, May crude has recovered, but is still down 0.21%. Today also ended up being an inside range day with a lower high and a higher low versus yesterday. But again, the low volume makes it really difficult to call this a technical signal of any kind. The International Energy Agency, or the IEA out of Paris, cut their global oil demand growth forecast. They are now expecting demand to grow by just 730,000 barrels per day this year, a cut of 300,000 barrels, blaming trade tensions and the economic slowdown that they expect will come with it globally. They did put out a disclaimer, however, saying, with negotiations and countermeasures still ongoing, the situation is fluid and substantial risks remain. Earlier this week, OPEC revised down its global oil demand growth forecast for the year, citing the same trade tensions. OPEC now anticipates demand increases of 1.3 million barrels per day this year, which is only a cut by about 150,000 barrels. They also cut their 2026 forecast. Now, despite that, they're clearly more optimistic than the IEA. Some major financial institutions are also cutting their oil price forecast for 2025 and 2026 for the same reasons. Some of these institutions like HSBC and JP Morgan have focused more on Brent crude, but they've taken their Brent crude price estimates down to $68.50 and $66 respectively for 2025. Considering that the spread between Brent and WTI futures for the month of April has ranged roughly between $5 and $6, this would take WTI down to the $61 to $63 range, where it's currently trading right now.